Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic. That's Fat Man Zoom. I don't know why I did that, but stock market is crazy and chaotic. We made it our mission to help you guys own it, and it has been a wild day, Fat Man Zoom. We're going to get into all of that. Before we do, how about you hit them up with the starting five?
Starting five, Ralph Vandenhoek, Parag Juneja, Christopher Wisdom, Victor Toledo, and Me Maroon, My Maroon, Me Maroon. The hell you guys' names are, man.
We can't talk today.
You guys are starting five. Don Fran, what's going on, man? Welcome to Own the Chaos. Welcome back if you've been here before. If it's your first time, welcome to our show. We are live every Monday through Thursday at 3:30 p.m. Eastern time to talk about what went on in the market today. We certainly have a lot of headlines to talk about.
Yeah.
Some stuff went off, some stuff tanked. So we'll break that down. But the main topic today is what really happened. You know, there was a big tech sell-off. However, there was this like competing value versus tech. What was the reasoning? Can we identify what happened? And really, more importantly, how do we move forward and what do we expect? So guys, make sure you stick around and don't forget to hit that thumbs up button for the content. If you enjoy what we're putting down. And if you don't enjoy, just hit the thumbs up anyway.
Just do it. It doesn't cost you anything. It literally takes zero effort.
I would ask you how your account's going to do, but I know it's going to derail. So I want to actually get right into the comment. Sorry, I want to get right into the headlines. Talk about a couple headlines. Don't give away the main topic.
I won't.
We need people to come in.
Yes.
So I want to just start with Tesla. I want to start where we ended, make this quick. We've talked a lot about Tesla, but Tesla had a pretty major sell-off. And we already had some comments. I mean, looking in at the chat, we have who mentioned something about getting into Tesla?
I thought somebody mentioned something about getting out of Tesla. I think it was Shane Haley talked about getting out of Tesla.
Shane sold Tesla yesterday.
Yeah.
Somebody mentioned, I don't know, maybe I'm just crazy, but I thought somebody said, here's the opportunity to buy Tesla. I think just generally, we had talked about opportunity areas for Tesla. Would this be something you would be considering to get in, or do you think maybe hold off on a little bit and see if this sell-off continues?
I think there's definitely a case to where I would say it's probably best to hold off a little bit. You could make the argument that today is the day to buy back in, but I already saw somebody also mentioning how I believe it was Michael Hanna. Here we go. It says, I've done a lot of buying today and I'm getting out of cash already. So I think just being a little bit too overreactive to buying the dip. I mean, buying the dip certainly is something that we always kind of say, hey, it's something that more than likely ends up paying off in the end, but there is a such thing as getting in a little bit too quickly and going nuts with the cash. You know, I'm in cash right now, a decent amount of it. We can take a look at the chart here on Tesla right now. We can see that it's down around 4%, which is very surprising. I'm going to move this out a little bit so I can just see it. But yeah, so around 4% on the day, and it was actually lower than that. So can we see more of a correction? And we have seen more of a correction from Tesla. I mean, we've talked about this going from $12.43 and then it landed all the way down at $900 a share. So is it possible for it to continue to go lower? Of course it is. But we've also talked about this. Yesterday it moved 10%, and we mentioned about how there's an average of 15% gains that Tesla makes as it goes into earnings if they report good sales. This is an average. So there's still more room for this to potentially move, but it doesn't mean that this has to go straight up every single day leading into earnings. So there is a possibility that this could maybe come down to test the 50-day moving average at around 1071. That wouldn't be that much of a stretch, but there could be a bounce in here as well. So I do think that there's going to be an opportunity for Tesla. I just don't know if day one after a monster day, the prior day, is necessarily a good time to buy.
Yeah, doesn't that always happen? You got a bunch of cash, you've been working your butt off for weeks, freeing up cash for that one, for that opportunity, right? So you got like 50% cash, and then all of a sudden you use up all the money, and then the market keeps going down. Like, that's Michael. I feel your pain, brother. I've been there before.
Yeah,
it takes forever to get that freed up, but then you use it overnight. It's crazy.
Yep.
But stick around. We'll talk about what to expect. I think that plays into the conversation on how things should move from a market perspective. Moving on, though, we'll go back to Twitter land. Guys, make sure you follow Brad at Own the Chaos. I'm at FatManZoom, but on my account, I had retweeted Rob Maurer, who runs Tesla Daily. I retweeted a tweet he put up yesterday, which was Tesla is the best performing S&P 500 stock year to date. I retweeted that today, and I said, not anymore. Ford is now the best performing S&P stock year to date. Ford had really good news today. Brad, why don't you tell them what happened, and then we'll talk about subsequently what happened with the actual stock. What?
Ford's just doing great today.
Yeah, guys, this is why you unsubscribe from our channel, is because Brad shoves it in your face if you're not in a stock that he's in, and he needs to do a better job of this.
Listen, somebody's got to toot my horn, and I'm going to be the guy that does it. We get enough people that shit on us for the calls that we don't make.
Yeah, I mean, we've been talking about Ford going off forever, but let's talk about why it went off today.
So Ford actually had a really big move today, and it's up around 11%. One of the big reasons is that Ford came out. So I put a video out last week about how Ford announced that they were doubling the production of the Ford F-150 Lightnings from 40 to 80,000.
Yeah.
They're doubling it again.
Yeah.
So 160,000 by 2023. So which is interesting because the reservations that were made for the Ford F-150 Lightning are around 200,000.
Yeah.
So the plan is to try to get these F-150 Lightnings pushed out and meet the demand by the end of the year. And going into 2023, they haven't come up with an exact date, but they said by 2023. So I'm assuming by the end of the year, we'll see that number. So that's huge. Total EVs now that they expect to have manufactured and delivered by 2023, Fat Man Zoom, 600,000 EVs. And they have ICE vehicles to support and back them up as well. So this isn't just an EV company. Yeah. They also have ICE vehicles as well still. So, but this is a big step. In my opinion, if we do see that $600,000 number, that second place conversation we've had as it relates to comparing them to Tesla would come to fruition in the EV race.
Yeah. And just for perspective, for those of you who are going to tell me that Ford's going to pass them, if they hit 600,000, which they won't hit 500K, book it. And we've said this, even if they don't hit 500K, I'm not saying as a negative, that's great for the company. I find it very hard for them to do that. But if it's at 600,000, that year Tesla is going to do over 2 million.
Yeah.
Could theoretically do 2.3 maybe. So yeah, I mean, it's kind of playing out exactly like we talked about. I think that have we heard like what deliveries are going to be this year? Like, what are their expectations for actual deliveries? I know we're talking about production.
Well, the projection for this year for all EV related vehicles for Ford is 600,000. So that includes the Mach-E, I believe the Maverick, Ford Lightning.
So they're going to deliver 600,000 EVs, Ford is?
The projection, by 2023.
No. This year, 2022. Do we know what this year is or no?
Well, I'm assuming by 2023, that means that this year. It's gonna, by 2023.
Oh, I'm sorry. I thought they meant 2023, they're going to deliver 600,000.
No, this says
no way on God's green earth do they deliver 600,000 vehicles this year when they haven't even produced one.
That's not true. They've produced the Mach-E.
Or I'm sorry, delivered. Are they
delivered Mach-E's too. They're all over the road. I don't know the number, but they've delivered. I mean, I see
Okay.
Mach-E's all over the place.
All right, I take that back. Well, I don't take back. No way they hit 600,000.
Okay.
What do you think?
I mean, they know how to manufacture vehicles.
You think they're going to hit 600,000?
Yes.
I almost want to make a bet with you. What do you guys think? Let us know. What do you guys think?
If you think that Tesla has the capability of producing 2 million vehicles by the end of this year, or 1.5, then Ford's more than capable of doing that. 600,000.
They're capable of doing 600,000 vehicles. I don't think EVs.
All right.
But we'll see. I mean, that'll be great. The other news I wanted to bring along with this, I don't know if you saw it, but the Chevy Silverado is kind of in line with this. GM did well as well. I don't want to say it went off. It had a really good day as well so far.
Yeah.
GM announced their pickup truck, their EV. And I'm wondering what you think. Regardless, I mean, I feel like the Ford Lightning is really what's going to get this stock going. Like the Mach-E is great, but like them dominating the pickup truck EV market seems like a foregone conclusion. And that's really what I think is going to propel this stock. Is that sort of a fair assessment?
Yes, I actually think that because that we don't really have an official word on when the Cybertruck's actually going to take place, this is a good advantage that Ford has as far as early movers are concerned. Not in EV specifically, but the EV pickup truck. I mean, you have the Rivian, yes, but they have no way of being able to keep up with Ford's ability to produce and deliver vehicles in the fashion that they're doing it. So I think that, yes, I think that the Ford Lightning is definitely the advantage that they have over other EV makers.
Do you, as far as Ford is concerned, do you think that when the Silverado starts moving, do you think that impacts them at all, or do you think that doesn't matter?
I think there's enough space in the market, especially because we haven't really seen an EV pickup truck, as far as mass production is concerned, really hit the market. I think that the Silverado could certainly carve out a little bit of that market share. But when you consider that Ford's using the number one truck that's been over the last 40 years that's been sold, that the Silverado, I don't think really kind of holds a candle to that.
Got it. Okay. It'll be interesting. And GM doesn't really get talked about, but it'll be interesting to see how that story plays out.
Yeah.
For them as well.
GM's still going to do well, but which, by the way, did you see the news that Toyota passed them in sales?
No.
So for the first time ever, Toyota is the number one auto manufacturer in the U.S. They passed GM today.
Gotcha. Jeff, I don't really understand this comment. Tesla Giga, 600,000 Tesla Giga China for sure. Got to agree with Brad on this one. Did you mean Tesla or were you talking about Ford?
Yeah, I didn't get that
I
one.
don't know what that means. How many guys who own pickup trucks would actually get an EV pickup? I think especially if gas prices keep going up. I understand the theory of like, maybe like man's men wouldn't do it, but I think a lot of people will adopt. I think a ton of people will adopt, but don't discount PW coaching that at some point they're going to have to adopt.
Yeah, there'll be no choice.
Yeah, you'll have no choice. So who are you going to go with? And you're going to go with the brand that you know and that you trust. And Ford has good brand awareness and has good brand loyalty as well.
Here's the other thing too. Once, your diehard Ford truck guys, quote unquote, finally understand and see the power capabilities that EVs have and EV trucks in particular, it's going to be a no-brainer, especially when it comes to towing capacity and all that good stuff. Like it won't be a hard sell, I don't think.
Yeah. I agree. I mean, we were already looking at, they had to shut down reservations. I mean, the demand shown there, like, you want to know how many? 200,000 until they stopped taking requests for the F-150.
And that doesn't include fleet vehicles either.
Yeah, that's true. Yeah.
That number doesn't include those.
Yeah. So I don't think there's any question as far as the demand's concerned. Like anything else is how quickly can they uptake and how quickly can they deliver? At some point, the product's got to matter, but they've done it long enough. I'm not sure. Like, I don't think there's any concern over that. I think it's just, hey, how quickly can we scale operations and actually get these in the hands of customers? Because the demand has shown pretty much with every EV company that it's there. It's just, can we can we fulfill the demand?
And the profit margins are higher.
The profit margins are higher. And I was kind of surprised at how affordable the F-150 is. I don't know much about trucks, but isn't it like $39,000 before incentives?
I can't confirm that. I thought it was after incentives, but I might be wrong on that.
Yeah, somebody shoot in the chat. You guys can Google search this really quick. What is it? Because I thought I read something that it was under 40,000 before incentives, which I thought was like really affordable.
Yeah.
I don't. What is a regular?
I agree. I mean, I think
cost?
the Cybertruck, I don't think is. What was the low end on the Cybertruck? I want to say it was around 45, somewhere around there. So it still came in lower than that. Don't quote me on that, but I'm pretty sure that's what it came around in on.
Looks like 49.9. It looks like
is the cheapest Cybertruck, and then it goes up, I think, to 70 or something.
Yeah. Yeah.
Okay.
Exactly.
So then yeah, it's 20%. If the F-150 Lightning is the low end is the 39, then yeah, it's a 20% discount to the Cybertruck. And here's the other thing too. I mean, we've talked about this too. The Cybertruck reaches a totally different demographic than the F-150 does, which I think benefits both of them.
Yeah.
And so again, I think that Ford stands alone in that area. And then you have GM coming in with the Silverado, and I'm sure that Toyota will come up with theirs as well for like the Tundra and stuff.
Yeah.
But at the end of the day, it's still the number one selling truck in America is the F-150, and I think that that's the advantage that they have.
I have no doubts that if you asked Elon if the Lightning was a competitor to Cybertruck, I guarantee he would say no, not at all.
I would agree.
That's not our competition.
Right. I would agree.
And there is space for both. And regardless of if you like how the Cybertruck looks or not, I think the Cybertruck, I'm interested to see how it evolves, because the concept of like how it has like camping mode, how you can grill out, like if the design changes in the future, but they keep those features, like what it does is really cool.
Yes.
And like trying to be indestructible, all those other things. So that should be interesting. I mean, it's going to be just fun to see them on the road when they come out.
Yeah. You know what else is interesting too, is that like when I was thinking about Ford and the features they have, I can't remember if the Cybertruck has the capability of charging homes as if it was like a generator. Do you know if they do?
No, I feel like I've heard that, but I can't. I don't know.
One of the big things that Ford's been pushing with the F-150 Lightning is that it has the capability of charging your home for up to 4 days. Basically, if you lose power, you can use the truck to power the home. My thing with that to as well, that you brought up with camping and stuff, if I had a trailer, I basically could use my truck to power the trailer. I don't have to worry about fumes and all that stuff. For undisclosed amount of time. Obviously, if you want to take a weekend trip, you can power your trailer with your truck, which is kind of cool.
Yeah. It looks like, I just did a quick search. It looks like the Cybertruck can do that.
Okay.
By the way, Savvy Money Show, thanks for pulling this information. The before incentive, it is $39,978, so slightly below 40,000, which I think is a great price point.
Yeah.
And then you factor in the incentive, these things are going to go crazy. I mean, even if you don't think people are going to like EVs, just the sheer price point and the discount you're going to get.
Yeah.
And then the money on top of that, you're going to save off of it being an EV. It's silly.
Yeah.
I mean, I want to get one.
And this is contingent on the Build Back Better plan going through, correct? Because wasn't that in the plan?
Yes, it was.
It was like 12,000, I want to say, for union vehicles.
I don't remember how much it was.
I think, for non-union. Yeah,
that sounds about right. And it was targeted like right in this price range as well. So Ford has a great day. I just want to mention a little bit about Ford strategy wise, because I have it, you have it, we're both. I mean, it's probably one of our highest conviction stocks for the year. In our bold predictions for 2022, we had said that Ford, we anticipate, will outperform Tesla.
Yeah.
Did last year. We expect more of the same this year. Not a knock on Tesla, but just speaking of the fundamentals of Ford and the huge upside to Ford, that is sort of like our thesis behind it.
Yeah.
So we both have it. That's the point. We both have it. Both have a lot of it. You had a ton in your account. But I just want to talk about strategy because we don't do a lot of it. And today we both trimmed some, and I want to talk about how we did it just to show people like a couple different ways you can do that. So let's start with you because you trimmed And this is your exit strategy, which was essentially setting a stop loss, right?
Yeah. So I had Ford calls, $20 strike that I bought in December. I've been kind of rotating my position with Ford in and out. So I've been buying up Ford, selling it, and buying it again ever since it was around $13 a share. Essentially, that started in around August time. So now these $20 strikes went the hell off. I had a lot of money wrapped up into them, and then now those calls are up 200%. So I decided to sell a third of those calls. So now I have 2/3 of my original contract, still have a lot of it. But man, with just the move that happened today and yesterday, I just had to take something off of the table because that kind of move was just incredible. So what I ended up doing, I went to the contract price. It was around $4 per contract. I bought it, I want to say somewhere around $2, maybe just under $2. So then I ended up setting a stop loss around 30 cents and just kind of moved it up 30 cents from its current high. So then I just continued to move it up. Every time the contract moved up 10 cents, I would just move it up. Eventually came back down and tripped it. And I locked in a huge profit, which I was super happy about. And I still have a ton of it in there. So I'm not letting go of Ford. And if it does come back down, I'll just be buying more. I mean, that's the thing. I mean, they have earnings coming up beginning of February. And so I think that we could potentially see a run into earnings. These contracts for Ford also don't expire until the end of February. So I got lots of time on them too. And I'm well in the money. So I feel really good about it. And, you know, if it continues to go, I still got plenty of contracts in there to where I can continue to reap the benefits. But for risk management purposes, I just had to take something off the table.
Yeah, that's fair. So February 2nd, I believe, is actually the earnings call. So you guys are aware, definitely a date to keep an eye on. And we should talk about this either in a pre-recorded video or in a future live stream. You know, what are we expecting? Because it's going to be really interesting to see what happens, what type of post earnings move Ford has. And I think it's, you know, fair to say we think that's going to move really well into their earnings as long as nothing really out of the, you know, really nothing drastic happens as far as, you know, the macro environment is concerned.
Yeah. And I mean, it could be a case, and this will be important to watch too, because it could be a case of, you know, is it going to be a buy the rumor, sell the news? Are we going to see this run into earnings? And then even though they produce and they do really well through earnings, does it sell off? So there's going to be a lot of conversations that we'll have leading up to the earnings as well. Yeah.
So you discussed essentially a stop loss, sort of guaranteeing a certain amount locked in. And that's obviously a common strategy. Trailing stop as well. You can automate that, which is certainly something based on percentage or dollar. All great ways to exit, great ways I would exit. But something that I've been doing more of lately, especially since the end of the year and how I got out of stocks, is I've actually done the opposite side of it. So rather than sell a stop loss, I've actually been selling calls against my contracts. And essentially I've maximized my profit so I could potentially like cap what I can make on it.
Yeah.
But I've also allowed myself the opportunity to potentially collect premiums for nothing. So, or just collect extra money. So I actually sold calls, which right now what are we at right now? 24.30.
Yeah.
I sold 24.50 calls. Now at the time the stock was at like $22 or something like that.
Yeah.
It was actually under $22. So I sold 24.50 calls, collected a premium. My position, if it stops out at 24.50, if it goes above 24.50, then I will have made 100% gain on those contracts, which is a great trade, especially because it's like a month old. And then on top of that, based on the equity I've put in, I've collected a premium that amounts to nearly 10% of my investment. So the whole trade, all told, will have been 110% move. Where at the time, if I would have set a stop in, I was at like 55%.
Yeah.
Let's say I would have guaranteed myself locked in 40% gains. I'm guaranteeing that or if I end up getting this exercised and them calling away my shares, I'll make 110%. So You talked about it before, essentially selling into strength. I'm really liking that strategy to get out of stocks because historically, like, one, I'm a little bit questionable about volatility the coming weeks or months or whatever.
Yep.
I think there might be a correction in the first quarter. So for me, it kind of provides a different sort of incentive as far as collecting premiums. But on the other side of that, the reality is, like, when I set stops, they always hit.
Yeah.
And they always hit and go like 5 cents further and then run off.
Right.
So this makes me feel better because I'm like, oh, I'll make a little bit of extra money. But
and you still manage risk that way. Like, it's not,
yeah,
you still make money. And in this case, it's more along base hits, right? And so I think just the base hit strategy certainly helps. And then every once in a while, you might hit a home run here and there, and you just keep it rolling. So,
well, and it's at 24.30 now. I think likely, I mean, it's a weekly for next Friday.
Yeah.
So there's still a lot of days, right? So you got 10 days between it, but it's at 24.30.
Yeah.
If it actually doesn't hit 24.50 and I buy another 24.50 and collect another 10%, that's the perfect scenario. So, and to be clear, the delta was below 30. So I didn't expect this crazy of a move. So, like, it wasn't like I was like, oh, I'm keeping a really tight, a tight stop, if we call it a stop, a really tight window. It was a 28 delta.
Yeah.
So, it could end up actually being a perfect play if it never gets above $25.
It might be
$24.50. I'm sorry.
It might be
$24.50. So we'll keep you guys apprised of that. Segueing.
Yes.
Is Ford a value stock?
Ford is a value stock. Yeah.
I would classify it as value stock.
Not growth.
The one main topic of the day, guys, hit that thumbs up. Growth tech. So interesting.
Yeah.
Partway through the day, techs just went red. Qs dropped almost 2%.
Got hammered.
And meanwhile, Ford's going off. A lot of the values going off.
Banks are going off.
Yeah, banks going off. Energy's doing well. So, we just wanted to talk about, like, what happened today, and then I'll ask follow-up questions.
Yeah, this is interesting because I thought this was a good way to start off too. Joseph, a loyal follower of the show. Certainly appreciate all the support, man. And always has good things to say, good insight to say. And I thought this is an interesting comment from Joe. He says, tech stocks are crashing for the reason value stocks are going to. Laughable valuations caused by federal policies. I love Ford and Domino's, but a car company and a pizza joint trading at 35 and 40 times sales. To me,
can you say something? Can you repeat the line? Laughable valuations. Just read the first 2 lines again.
Tech stocks are crashing for the reason value stocks are going to. Right.
Say the second sentence too.
Laughable valuations caused by Fed policy.
Sorry, go ahead.
And so just referencing Ford and the sales. Joseph, I respect the heck out of you, man. But what are you talking about? If we look at Goldman Sachs, next year's forward PE, even though it moved 50% last year, is still under 7 times next year's earnings. 7. Just to give you an example of where we're at with Apple, that's trading at 30 times next year's earnings. So I don't know what we're talking about. I mean, I get that high value tech is going to do fine. They're going to do okay. The high valuation tech, especially the ones that don't make money, and I'm talking about Roblox, Snowflake, that's gotten wrecked. A lot of cybersecurity that was highly valued. I mean, I think CrowdStrike's trading at 200 sometimes next year's earnings, like insane stuff.
Yeah.
So if you want to talk about stocks that are overvalued because of Fed policy, that's where what's really going on here. Not value. Value's barely moved, and when you look at some of the PE on those, it's super cheap. Even Ford trading at around now with the move that it's made today, I can tell you, just to give you a roundabout estimate of what next year's PE is looking like, or the forward PE, it's still at 13. And we started talking about trading around 10. So it's very, very low when you compare it to the likes of Tesla. I mean, Tesla's trading at ridiculous levels. So, I don't necessarily agree with that. And I'm not trying to come down on anybody, but I don't know how that makes any sense whatsoever because of Fed policy. Fed policy is what caused a lot of the tech and high growth stocks to go crazy because they benefit off of real negative rates. And that's what's the environment that we've actually seen. So now things are kind of flipping. We're seeing the 10-year yield actually spike today, went up to almost 1.7%. And so a lot of that is the result of people already assuming that we're going to be in for a wild ride with rates potentially going up from the Fed. That'll be happening later this year.
And I just want to, this is the second part of what you wrote, and I appreciate the comments. And
yeah. Absolutely.
Now, if you're right, man, I can't wait till you come back and start hammering on Brad. But I don't. If you're right, I'm not sure that these are the reasons. I'm in Brad's boat on this one, and I'm not in his boat with everything. So just to be clear, but second part said that despite ideal conditions for growth, many tech stocks are still not able to turn a profit. This shows investors how weak the business model is. And I'll add this. I don't know if I would say that they're not able to turn a profit. If you're a growth stock, investors, Wall Street actually would prefer you not, you can be profitable, but like they're okay with you moving to grow, like you getting money to grow. So like they don't want you to give a dividend. They don't want you to do share buybacks. They want you to just pump money.
Right.
And if you go to any interviews with Elon in the early days, he talks about they could have turned a profit like literally a decade sooner than they actually did, but they wanted to scale. They wanted to build capacity, and look how that's paying off for them.
Yeah.
So it's not necessarily that investors don't think they can turn profit. There's many companies that you just look at their gross margin. If you look at the gross margin, if there's above a 30%, a company can turn a profit, but they choose not to. It's the value of money or what the cost of money is. And that's where the yields are coming into play, because you have to incur debt, because you have to bring on lending. The cost of that is even higher to get. And if you want to continue to do it,
which slows your growth.
Yeah. Yeah. Because either you can't bring on as much or it's eating into your numbers.
Yeah. And Joseph brought up Domino's again. I'm not saying that Domino's is a buy. I don't think that Domino's is a value stock that I would buy because it is trading at 40 times next year's earnings. There's plenty of other cheap ones though. I mean, we look at, you just name it.
Well, I have one I want you to look at anyway, so we can talk about it.
Go for it.
Rocket.
Yeah.
I just got into Rocket. I really like.
I can feel people rolling their eyes.
I know they could. But anyways, Rocket's one that is profitable. It did IPO recently, but it is profitable, and fundamentally it actually does look really good.
They're next year's
it's in a downtrend though, people.
Yeah, forward PE is at 6.5. And it is in a downtrend and it hasn't changed direction. I will say more power to Fat Man Zoom. I will probably wait till this actually changed some sort of direction until I started to get excited.
Well, and I'm not saying anybody to get into it.
Yeah, and to be fair, you said that you were getting in on a flyer. As far as that's concerned.
Yeah. So I did buy a call on Rocket on a flyer, but it is one that I have my eye on. And it's also, we made really good money on Rocket that first run. It was like one of my top 3 performers last year because of the move. And I think we see that move again this year.
Right.
Whether it holds up or not is going to be the question. But fundamentally, when you look at Rocket, think about value. That was sort of my thesis behind it.
I get it.
Yeah.
I think when I'm looking at value stocks, and you could lump Apple in there if you wanted to, but you could look at something like Boeing, for example.
Yeah.
That's still an industrial that's doing starting
downtrend.
They are in a downtrend, and you can see that this is here, but we're starting to kind of creep into that breakout territory. So I think that Boeing was one of our top picks for 2022. I think it does continue to do well. This is a good value stock that I think is on the cheap. And like I was saying, Goldman Sachs, we take a look at their PE. It is still under 7. 6.82 is what this is looking at here. And so the breakout is still real, man. I still think that there's lots of value that's on the cheap, and that's what's happening today. They're seeing the environment. They know the Fed is tapering. They know that rates are going to get raised. So what do? You get out of the stuff that you bought low and now you're selling high on, and then you go find value. And I think it's going to be in a lot of these stocks revolving around energy, revolving around industrials, even tech, but it's got to be large cap value tech. Like Cisco, IBM, even Apple's going to be in that conversation. But those stocks that kind of have been largely ignored for the last decade are going to start moving again, and we're already seeing it.
Yeah, and this is kind of, we didn't name it, but when we talked about sort of wiping the slate clean with last year's narratives. Can you pull up Boeing again?
Yeah.
But you almost have to have a QB mentality because you don't want to have bias going into a new year. I know the new year was, I know 2021 was just last week, but you really got to start from scratch and just start over with your due diligence, with your thought process. This chart right here, which is actually set up really well, broke above the 200. It's going to be above the 50-day moving average, right?
It closed above it today. Yeah.
So we're closed now. So it closed above it today. Could potentially retest it. Would still be bullish. Breaking out of this trend. But if there's a ton of stocks we can list that have this exact same downtrend, and the question is, does it look like this at the end of the year? And I don't think they do. I think there's going to be a large majority of them that are profitable, that are value stock, and that have good fundamentals that are going to look different, and there's going to be a new trend at the end of the year. I'm not saying it's going to happen right away. I actually, going back to my point about the potential correction in the first quarter, I think it's really going to be a second half of the year boom.
Same.
But my point is, when it's all said and done, there's going to be new narratives. We'll see what they are, but I believe that these charts you see, that's like the downtrend ones with value, I think there's going to be really good opportunities that we're going to be surprised about come the end of the year.
Yeah, I mean, we take a look at the weekly chart. This is the weekly chart, guys, that you're looking at here on Boeing now. So each candle is represented by 1 week. We're still not anywhere near what we saw Boeing at pre-pandemic, which is right here. And then before the pandemic hit, that's when the 737 Maxes were having issues, and that's why you saw this downturn as well. So this is kind of like at its peak before 737 had its issues, right around $443. So that's basically a double.
Yeah.
And I'm not saying that Boeing's just headed straight to 100% gains this year, but the possibility is certainly there. They've talked about manufacturing and how they plan on increasing output by the end of the year by 50% on just the Maxes. And then we've also got plenty of orders coming in for them. So I certainly think that this is definitely one to take a look at. You take a look at some of the transports as well. I mean, GXO has been doing really well. And this is a little bit different than what we've been talking about as far as stuff that has been beaten down, hasn't really come back yet. But this is one that certainly that just started trading. We'll go back to the daily chart here. Just started trading over the summer. It was a spinoff from XPO, which is a transport as well, formerly known as Conway. You guys might recall that. So with the supply chains easing and demand still remaining strong, this, in my opinion, would be a good value stock to get yourself into. The other ones too is the XHB or the ETF for the home builders. The home builders in general, I think, are going to continue to do well. There's a huge supply problem in the U.S. when it comes to homes. The only way to rectify this is to build more of them. And so I think that the home builders are going to continue to do well. This is a value stock, group of value stocks that I would consider getting into. So there's lots of good, cheap stocks out there fundamentally that I think are worth scooping up. And the institutions, a lot of investors are starting to see that.
This is the year of the unsexy. I'm saying it now.
Yeah. Grandpa's stocks are coming back, baby. Go buy some GE.
You did mention, I didn't want to lose this comment because you did mention Goldman Sachs. Alonzo Gutierrez asked, are you guys invested in the financial sector, which is one that we're extremely bullish on.
Yes.
We were last year and we are this year as well. Why don't you take that one?
Yeah, Bank of America, Goldman Sachs, even Wells Fargo, despite the 60% move that I had last year, I think is a good value. We look at Bank of America, and their balance sheet is incredible. Their PE is a little bit higher than most of the other banks, sitting at 1369, but for good reason. Their last quarterly earnings were incredible. Tons of cash on hand. They are buying stock back as well. It was really kind of frustrating the last quarter of this year to see that Bank of America was just kind of sitting here. I actually ended up getting out of it. I do plan on getting back in. I'm looking for a breakout over 48.69 to see that continuation. Maybe if this comes back and falls down to the 50-day moving average, I would consider adding to it. But Bank of America is definitely one. Goldman Sachs, of course, we've already just talked about how cheap that is. And a lot of the other ones too. JP Morgan's in that same boat. So I don't know if it necessarily matters which bank you get into. I think it would be important to have exposure to an investment bank like a Goldman Sachs, and then also maybe a regional bank like Bank of America. I think something along those lines would make a lot of sense to be in the financial sector. But we have to remember, if we look at the XLF, how long were the financials in the doghouse for?
Yeah.
A decade. So we go to the XLF. This is the financial sector ETF. This kind of lumps all of those banks that I just mentioned together into one ETF. And if we take a look at this, we can view this as an industry. So this is what happened in 2008 in the financial sector.
This is the monthly chart, by the way.
Yes, sorry. This is the monthly chart. This is what happened back in 2008 when the crash took place. It was, as we all know, the Great Recession. The banks just got hammered and never really recovered until 2020. February 2020. Then guess what happened? I think we all know the story there. The breakout finally took place, and we called this breakout last year in January of last year that we finally would see the financial sector come back. They did. But here's the thing. They have a whole decade to make up for. I think that the financial sector is still very much worth holding on to. And we just, again, look at those fundamentals and just look at how cheap they actually are. If you're willing to pay for Apple that's trading at 30 times or 35 times next year's earnings, then why doesn't Goldman Sachs look that attractive? And I think it should.
Yeah, I agree. And to more directly, or to the second part of that question is, are we invested in that? Yes, personally. And with our dividend bot, we've had Goldman Sachs in there since last year. We have Bank of America, our eye on that as potentially one that we could be putting in there. But yeah, we've been in there. We like a few of them, but Goldman Sachs always been our highest conviction. And the performance has been great in the dividend buy, which, you know, we don't talk about a lot. More we talk about in our Discord with our Chaos crew, but our dividend bot is value.
It's crushing.
And it's going to. We have high hopes for it this year, especially because it's so heavily lean, because it is value. I mean, it's largely overwhelmingly in value stocks.
And it actually performed really well last year too.
It did.
I think it does even better this year. So a couple of questions revolving around oil. We haven't really talked about energy yet this afternoon as far as value is concerned. A couple of people mentioned this. I'll just grab Tiger's Edge here. It says, nice close on Marathon Oil at its 52-week highs. Where do you think Marathon or oil goes from here? And I've been saying this for the last 6 months, Fat Man Zoom, maybe 9 months, about oil going to $100 a barrel. I think that does happen. And that kind of goes back to what Joseph was saying. I saw he mentioned something about oil as well, especially as we're going away from oil. But in the short term, in the medium term, you know, we're not ready for a fully renewable energy economy right now. We just don't have the infrastructure there. So we still need to rely on oil to get us over to that, you know, to that side of things. So oil, the demand is going to be crazy still. The demand for travel is wild. And so oil is still going to remain, it's going to continue to go up. And another factor here, catalyst, was the OPEC meeting today took place. No plans to increase output. And so it's just going to be business as usual. And so if we're not increasing the supply and the demand continues to stay strong, price of oil is going to go up. And that's another one that suffered over the last 10 years that hasn't moved. People don't care. They don't bat an eye when their Big Mac goes up $3 over 10 years, or their coffee, you know, the Starbucks goes up $3 over 10 years. But everybody loses their mind when oil goes up, which is kind of mind blowing. But I think it's their time to shine. And oil, financials, probably the strongest performing sectors of the year.
Couldn't have said it better than Mike Hudson. 100 people watching, only 41 likes. Get those likes up. Quality advice. I appreciate your advice, friend. A couple people hollering on Boeing.
Yeah.
Soterios Anatolos.
Okay.
I'm trying to do it in my Greek accent.
Oh, is that Greek?
My money's on Greek. I don't know.
You would know better than me.
I don't know. That's a guess, but I think it's an educated guess.
That's
Dimitri Batruni. Oh, so Sartorius. Boeing has a lot of issues. Look at Airbus. I'll work on that, brother. I got to get better. Or sister. Dimitri Batruni. Airbus is better. Just your thoughts on Airbus in general. Is Airbus isn't on the New York Stock Exchange?
It's an OTC.
Okay.
So Airbus is traded over the counter, which means it's not traded on the major exchanges. Boeing is. There's a duopoly here. And listen, I will be the first one to tell you that the management in Boeing is terrible. It's awful. Okay. I don't know how they're continuing to report a loss. I mean, especially the way that things are moving. Costs apparently associated with COVID. Okay, whatever. Everybody else has been dealing with it. Why aren't you? I don't like the CEO. I think he needs to get out of there. And so there are problems. I'm not saying that Boeing is the perfect stock, but I think that it does outperform the market this year because there is a duopoly here. Airlines are under a lot of pressure. and to get more efficient planes that run on the new jet fuel that is coming down the pipeline here. And so also technology. They have to keep up with the technology. You want Wi-Fi on your plane, and they need to order new planes for that. So Boeing, Airbus, those are the only two manufacturers that you can order from, and hand over fist, big companies, American Airlines, United Airlines, Southwest, UPS, we just saw an order from them. They all go through Boeing. The military goes through Boeing. Airbus is just a very small part of that. It's just those two, and Boeing is the big dog on campus.
Savvy Money Show, how do you feel about Intel going to float Mobileye part of business and Walmart going to Flipkart side of business? We brought up Intel, and Intel's interesting because fundamentally, definitely a value stock, fundamentally looks good, but they've had some challenges, and last year it took some hits. And I talked about it for this year. And it's tough with these legacy companies because you're talking about tech that they've got serious competitors, NVIDIA and AMD.
Yeah.
They're not going to let them breathe. And so they've got to decide how they're going to progress forward. What I will say that I think has that could work in their favor is it wasn't necessarily a condition of them not wanting to evolve, as we see some companies not wanting to evolve. It was more of a condition of they have a flaw in their business model and they had chip issues. So it was something that I think may present an opportunity for them to carve out a new niche in their business and potentially come back, just because with supply chain, there is demand there for them.
Yeah.
From a long-term perspective, Intel, NVIDIA is just going to continue to dominate, in my opinion. But I do think there is an opportunity there. Me personally, if you are patient, if you have time, I think Intel could actually do well this next year, maybe 2 years. But NVIDIA is still Fat Man Zoom special for me, is still the winner. AMD is still close second place for the long term, just to be clear.
Yeah, and Intel has a great CEO too. It's just they've been dealt kind of a shitty hand, and now they're having trouble keeping up with their competition as well. Didn't help that Apple ended up dumping them for M1 chips too. So I think that there's definitely some value here, especially the way that semis are continuing to gain. Continuing to rise in demand and stuff like that. I mean, we saw Taiwan Semi just go absolutely crazy over the last couple of days. So Intel's still going to be there at the end of the day. They might just not be the biggest player on campus.
Miguel Monti says Intel is everywhere. How are they being left behind? Mind-boggling. You may think that, but they're being left behind because their growth isn't keeping pace with the AMDs and with the NVIDIAs of the world.
Technology isn't either. I mean,
yeah.
The nanotechnology is falling far behind.
Yeah. So you got to remember, if the market is forward looking, it doesn't matter what you're seeing everywhere, because the reality is the growth isn't there. And that's the problem, is forward looking. Stagnant isn't good enough. Even slight growth isn't good enough, especially for this industry.
Yeah, absolutely. It is cutthroat out there right now. And AMD and NVIDIA are really running away with it.
They are. It's crazy. As we wind down, I want to go ahead and just discuss what to expect moving forward. What do you expect to see for the rest of the week and moving forward into the next week? Do you think that we'll see this continue as far as the tech versus value, where tech could see more red and the value could continue to do well?
Oh yeah, I think this rotation continues. We have 5% of energy, or 5% of the S&P 500 is weighted in energy. 5%. 25% is weighted in big cap tech. So I think that there's still plenty of room for value to continue to go up. I think that there's still going to be this rotation that takes place, and we've been talking about this for the better part of last year. Right? We saw this coming. We knew it was going to happen. I didn't expect it to happen this quick. I mean, we're only in the second day of the new year, and we're starting to see this really take place. So I don't think it's just going to be this quick flip, right? I think there's going to be this gradual progression of a rotation. And to be truthful, I think that large cap quality tech, and I'm talking Apple, Microsoft, even some of the other ones such as Google, Amazon, I think also plays catch up because it hasn't really done anything in the last year. I think big cap quality tech, and again, I want to mention Cisco and IBM. I think those do really well because they're the ones that don't necessarily need to take out loans to rely on interest rates to grow. I think they'll be fine. It's the other stuff that I think that may be really treacherous for some of you who still own that. So I do think that we're going to see more of this. I think there's going to be, accelerated rotation, and then there's going to be some tapering off. But at the end of the day, I think that this is the direction we're headed in, probably for the rest of the year.
I got to throw this question in there. Chris Alvarez, what is your view on crypto as it pertains to how, we talk about other safe havens. We not only want to say safe havens, but some people are thinking about gold as yield goes up. How does crypto play into that? Do you think it will coincide with how the market reacts?
Yeah, I think crypto could be a little treacherous for them too. If we look back in 2008 when rates went up, in a similar fashion in which people are thinking is going to happen this year, Bitcoin didn't do well. And I think that there's definitely a case that you could make that Bitcoin just kind of flattens out and doesn't do a whole lot. I don't think we have the same type of year this year that we did have last year, just because things are changing a little bit. That being said, I think that Bitcoin could certainly go up this year. I just think that it's going to be a much slower pace than we saw last year.
Yeah. Quick answer, Tiger's Edge, Qualcomm. I like Qualcomm. Yes. I think it's definitely an opportunity if you like it.
Good quality tech stock for sure.
Yeah. But I think that's the point is like, I wouldn't get like tech versus growth. Like, first off, things always are cyclical in general.
Yeah.
But I think to the point of profitability, debt, things like that, there are growth companies that are doing it the right way. And then there are growth companies that are getting deeper and deeper into debt. And I think it's going to be your responsibility when you're doing your due diligence, if you want to get into tech, because tech is still going to do well over the long term, to really be smart about what you're digging into and what you're looking at. Because you take a company like Penn, which is, I can make the argument that it's kind of turning into a tech company, which started as a brick and mortar, and they're doing a good job of evolving their brand. They've said we can be profitable if we want. Yeah. But we care more about entering into the Canadian market, growing in markets that are legalizing online sports betting. Right. So noticing those companies and finding out, okay, they're not profitable, but they could be, understanding, well, they're probably going to face some resistance, but this is an opportunity that's very different than, I hate to say it, a Clover, which is not only is it not profitable, but it's going in the wrong direction. Like, you got to really dig in and figure that out, because it isn't just a simply, well, it's not profitable. I think there's a little bit more to these stories that you got to look at. Yeah. There's definitely going to be exceptions to the rules, but broadly, it's going to be, if you have a high valuation, high market cap, and you're not making any money, you might struggle a little bit. Yeah, you will. And it's where those opportunities, if you're thinking about long-term. Yeah. However, currently for this year, I mean, it's playing out a little bit sooner than we thought, but value, I think we'll do well. So we're seeing the start of it now. I mean, tomorrow could be a huge green day for Qs. It could bounce back. Fine. But as it plays out over the year, I think this is going to be a common topic that we're discussing. Very choppy, I think. For sure. Yeah. So guys, if you are interested, I think small caps do well. If you guys are interested, we send out 5 stocks that we're watching every morning, right before the market opens. It's a free daily watch list. So check it out. I got to stop doing this. I do this a lot. I got to stop doing this. Sometimes I need to do it, but a lot of times I don't need to do it. I do the same thing. I have to this minor adjustment all of a sudden made the biggest difference in the world. If you guys are interested in our watch list, click on the link in the description. It'll take you to ownthechaos.com to get your free daily watch list. But this will be what we kind of are keeping an eye on. So check that out for sure. And again, as a reminder, make sure you come back here 3:30 p.m. Eastern time, Monday through Thursday, and we're live on Sunday at 7:30 p.m. Eastern time. We appreciate you guys showing up. What a great show. Yeah, it felt good. It was awesome. Guys, thanks so much for hanging out. We will see you tomorrow at 3:30 p.m. Eastern time. Bye. Bye.